Good morning, Jayaram here from Almus Market. Uh, so we have seen a relief rally in US stock market, in fact, global markets also yesterday after Powell's deposition. Powell actually confirmed a normalizing policy, raising rates and balance sheet runoff, and most of it was expected. More importantly, no time has been set for the rate rise as well as QT. At the same time, he has stated that the balance sheet size of 9 trillion with the Fed is more than where it should be. He also stated that the US debt level is unsustainable and that has a larger implications for the dollar. So now we turn our focus to inflation data today, where the headline is expected around 7% and the core expected around 5.4%. Again, any larger deviation will have a will elicit any reaction. But overall, from the action of last 10 days in the new year, one can assess that investors are taking more risks. They have been cautious for some time now, due to which dollar has been holding strong, particularly against major currencies. And the EMs also, they have taken a cautious stance, selectively investing, and many EMs have already raised rates, barring India and China among the major countries. So that has actually kept the rate differentials with the US in check. It's not really gone up. US is not gone up in favor of US despite the yield rise. It's roughly where it was around COVID time. So now with even with QT slated later in the year, taper due to end in March, the liquidity that has already been created due to fiscal and monetary policy remains in the system, and that's making the investors take more risks in high growth areas, high yield areas. So that's the broad approach, and that is actually been helping the rupee as well. On the dollar index, as I have been saying, we have seen a large move upside since January last year, and that is getting corrected. You will know in the coming times whether it is a shorter correction or a long drawn correction. It's possible that euro can even go up to 1.16 if it breaks 1.1420, which is a crucial level. GBP has been outperforming, reversing its underperformance of last several months. Even yen is reflecting the fact that the yield rise in the US has been by and large played out. That's why yen has also strengthened a bit. Even gold reflects that dollar weakness is in place for some time now. On the rupee, obviously, every day we have the same pattern, open with a gap on the downside and minimal retracement to the upside, and then market is selling into sporadic bids from RBI. Only yesterday we had seen more consistent bids from RBI, which took the rate up by about 15 paisa. But again, that did not sustain in the offshore market. We are now trading below crucial level of 73.80. So the trend is really on the downside, although short-term indicators are really oversold. One cannot say that this alone is enough for a reversal. We'll have to look at the next supports that come at 73.50 and maybe 73.20 also, unless RBI has other ideas. Thank you. Have a good day.
Okay. So basically, market was expecting a kind of a timeline from Powell saying that when the balance sheet winding up will start, and market has not got that. So both risk on sentiment prevailed in the market yesterday, and the US bond yields also started. Actually, US bond yields fell yesterday evening. So US 2-year yield fell by 5 basis from a high of 0.945 and US 10-year yield fell by 4 basis to 1.74. Uh, and he reiterated one thing is basically by March, the asset purchase tapering will be over. And in a way, he indicated maybe March can see a one rate hike also. But future of rate hikes plus balance sheet winding up, that still market would be taking a clue. Euro made a high of 1.1371, which is a 2-month high, but is still in the very narrow range it's moving. Once 1.1390 and 1.1420 taken out, then we might say that Euro is probably headed higher. Gold is still trading in a range of 1719 to 8020, which is there for last almost 3 weeks. We will be seeing that whether it breaks this week or not. During last few sessions, Indian forward premiums and MIFORs have moved higher, and they have moved higher significantly. I just highlighting 5-year MIFOR had moved up by 70 basis from a low of 550 mid-December to 620 yesterday. Now rupee appreciated, but for a longer term ECB borrowers, the total hedge cost remains same because forward premiums have gone higher. Indian 10-year JSEC yield closed at 656. Yesterday we were talking about that the new bond has been announced, so there could be some buying happening in the old bond. Let's see whether the 10-year cutoff comes below 6.5. Now market would be looking for cues from a data, and the important data which will be released today both in US and India would be CPI numbers. US CPI is likely to print year on year is likely to print 7%, where Indian Indian CPI would be likely to print at 570, 580. Yeah, that's all from me. Have a nice day.